late night, they ain't getting no rest. Work so hard, people think I'm obsessed. Cream at the crop, won't settle for no less. Headed to the top, remaining so focused. Yeah, gorilla of the jungle, I've been beating on my chest. I learned from the struggle, it was all just a test.
Hey guys, and welcome back. So it's been a little bit since my last video update. I did take about a week off there, just went on a bit of a ski trip. So I do thank you for your patience. There wasn't a lot going on in the markets. There was a lot of kind of news and volatility. Not really stuff that we're looking to trade. Again, we want to wait for that confirmation on the charts, making sure that we're positioning ourselves on the right side of the trend, not getting too aggressive. So it was a perfect time to kind of step back from the charts, recharge a little bit, go enjoy life, really remember why we're doing this. So practicing what we preach, both when it comes to the actual analysis and investment side, as well as why we're here. So don't forget, we do invest so that we can have the freedom to do the things that we want to do. Life isn't about just staring at charts all the time. But that being said, we're back at it, back in our regular scheduled programming. And we're going to get into the charts. I'm going to update you guys on what's going on in the markets here, what's been happening, and see where we might be headed from here on out. So flipping over to the Bitcoin chart, first of all, we'll just take a look at our high time frame here. So looking at the weekly chart, I'm just kind of looking at the cycle structure. So obviously I've shown you this trend line before, kind of tagging each cycle peak here up through the 3 prior cycles. So we do see here, it's kind of one of those scenarios where the cycle top might be in. That is another theory that I've mentioned previously. So we need to be prepared. If that's the case, we can look at prior cycle examples here. So we see, even in this cycle back here in 2017, essentially we saw the price go up and come back down to the 786, so at least the 786. In both cycles it came a little bit lower, so just breaching that 786 slightly, but still offering a great level of support to really buy and accumulate Bitcoin. So we saw in 2017, it came back, we had our 786 retracement back down here, and then in the prior cycle, from that bear market low to the high, we had our 786 retracement, which ultimately ended up being the low for that bear market cycle. So if we look at the current price action right now, if it were to play out and the cycle top were actually in, then we're looking at a cycle top, or cycle 786 level of about 35,500 US dollars. So that's going to be my bear market target if the cycle is indeed over, if we get a left translated cycle due to a larger breakdown in the macro side of things. So if the SPY continues to break down, tensions continue to increase on the global side of things, we might see more volatility and more sell-offs in the markets. That's what we've seen recently. That's what we kind of avoided by when we saw these warning signals up here. We de-risked ourselves in really good profits and we avoided that 20%, 30% correction. So really good job there, listening to the charts. That's why we don't follow the herd. Everybody kind of on Twitter saying, we're going to go to new highs, new highs. It's just the same thing over and over. Everybody watches the same indicators and they all expect the same results. So I kind of like to look at it from a contrarian point of view, not to be the contrarian myself always, but you have to at least consider the opposing side of things. You have to look at both narratives, both biases. It doesn't pay to get stuck in a single mindset. That's what we call a perma-bull or a perma-bear. So essentially what you're going to do when you get stuck in a mindset, eventually that mindset is going to bite you in the butt and you're going to end up making a decision that puts you on the wrong side of the trend. And then in a volatile market like Bitcoin, being on the wrong side of the trend can really hurt and really kind of shake a lot of confidence in investors and cause you to kind of capitulate at lower prices. So we've talked about that. We just need to be aware of what's going on. So we'll take a quick look at our weekly indicators here for our momentum. We see our directional movement index here, a little bearish cross of those two moving averages here. So that's not what we want to see. We see the RSI, or we see the MACD with that bearish cross continuing to curl down, not quite looking like a bottom yet. So still more bottoming to be done on the MACD here. A bearish momentum on the DMI. The RSI looks all right. We've kind of got down to these neutral levels here, but it's not not gotten down to the traditional bottoming levels that kind of come down here below 30 RSI. So that's something we're going to be watching, you know, that moving average curling down. I think the RSI just comes up or rejects off that moving average and we come back. We have just some more bottoming to do here. So we have lots of levels of support that we want to watch. So we've got this downtrend breakout right through here, which is also coincides with that 0.5 Fibonacci for the cycle. We can also look at a lower time frame Fibonacci level. So we'll flip to the slightly lower time frame for Bitcoin here. Take a look at the daily. Again, the momentum indicators are going to be slightly different on the lower time frames. So here we're actually seeing a little bit of a more bullish setup. We do see that orange DMI line still curling back up, so not ideal in terms of the directional movement index. Kind of neutral bearish leaning is how I would place it right now. The MACD in those oversold levels, trying to get that bullish cross. We see the green histogram wanting to flip green here, but we've seen that twice before where we just didn't get that buying pressure to really follow through. RSI coming down to those lower levels. So nice to see. We do have a bit of a bullish divergence here in terms of the RSI and the price action. So you can see the slightly lower low when it comes from these two lows right here, and then that slightly higher high when we got the RSI down here. So there is a bit of bullish divergence we can watch there. We'll take a look at our daily chart. So I'll get rid of the weekly Fibonacci zone right now. And then let's see where that our, if we pull a Fibonacci from this price action through here, so that daily time frame, looking at that 618 to 786 level, that's going to offer a lot of support. We also see here that point of control for the VRVP, that's our volume range visible profile, sitting right there. We've got these two Lux Algo order blocks through that golden zone. We've got our down sloping trend line. We've got a lot of horizontal support dating back to the prior cycle. So really looking for that position in Bitcoin. You know, I'm going to start buying spot Bitcoin kind of under 75,000, I think. So my plan essentially is I want to accumulate Bitcoin between 65 and 75,000. That's going to be my goal, kind of targeting this Fibonacci golden zone in here. That being said, I'm going to hold that position kind of cautiously. I'm going to have a stop loss. So I'm going to be really paying attention. You know, we might see something play out like this, where we continue to break down to these lower targets, and then maybe this is where we start to reverse and we can really start to go and attack these higher levels. Alternatively, we could just see a further breakdown where, you know, we are in that bear market and we lose these major support levels. So if we see something playing out like this, where we come, sorry about that, let's say we come down, you know, we break below all this support through here. We don't have the uptrend structure we're looking for. We're stuck under that VRVP and we get rejected right here at this trend line. That's going to be my signal to cut my position and get out before the continued downtrend plays out. Alternatively, it could come up and then maybe we break out, retest it as support, and then continue up from there. So the reason why is I wait for that bounce and see how the momentum indicators look here. If we decide to cut the position, then we just cut it and then we watch the price action and see what's the most likely next entry. But that's that bearish rejection where we are kind of expecting more downwards price action. We don't want to get caught in that, so really trying to avoid that. If we build our position here between 75 and about 65,000, you know, you end up with a rough cost basis of about 70,000 per coin. And then, you know, if we come down here and we go back up and reject and we have to cut our position, it is a minimal loss, but it is something I would rather take the very small temporary loss and look to reuse that capital elsewhere when the chart supports the kind of market conditions a little more favorably. Other than that, we're still just watching that price action. We'll flip over to the very low time frame here. I kind of want to show you guys a few different price patterns. So we came down, we're in that downtrend price or downtrend structure here, kind of on the higher time frame. So lower highs, lower lows. We came down here, put in our low, and we are attempting to kind of reverse it on the low time frame. So the 4 hour here. That being said, this is a bearish wedge, so we've got our bear flag, and then we're in this bearish wedge right now. So a bearish pattern, ultimately, more often than not, will break down to the downside. That's why I'm kind of still cautiously optimistic, waiting for these lower targets, and just seeing, we want to build positions when it makes sense to do so. So we're either going to get something like this that plays out, where we come back down, maybe we lose the support there. Sorry about that, I'll just flip this. So yeah, we lose support, retest, you know, into resistance, we're rejecting, and then we just have to come down, test our Fibonacci levels a little bit more before we can try to find a bottom down here. So that's one option that could play out. If we look at the 4-hour momentum indicators, we see a little bit of kind of neutral momentum right through here, but that positive line curling down looks like it might have a bit of a bearish cross coming up. The MACD looking a little overextended, kind of curling back over. And the RSI also kind of curling over a little bit here. I'll zoom in for you. So yeah, we see just lower highs kind of curling in. So not really what we want to see. That's that bearish divergence on the RSI on the even lower time frame. So we can see that there is a little bit of bearish momentum, and this might play out where we break down out of this wedge, you know, but we also on the even lower time frame, so you can really kind of dissect these and look at every single time frame. The higher time frames are obviously going to be more kind of directive of where the overall trend's going, but we can look at the near term and see what's going on. So in this wedge, we're currently just in a bear flag consolidation pattern. So within the wedge, we see here kind of just this bear flag, or no, sorry, this bull flag consolidation pattern, my mistake. So this is a bullish pattern within a bearish pattern. So it's an interesting little thing here. We see this Lux Algo order block right here, and we see this resistance line right through here. So the most bullish case scenario is we're going to break out of this bull flag, back test it as support. Maybe we can break out, take out these this trend line here, and then we can start to continue up, and then we're going to really have to take out this big sell order block right through here. So looking at Bitcoin, you know, this could offer a good swing trade opportunity. If we break out, back test here, and the momentum indicators look reset, they look kind of ready to run a little bit, then this would be a good swing trade. You could enter right here. Your target would be this sell order block up here, and you would have a stop loss just below, I would say, the 200-day moving average. So this blue line, that's going to put you below this support line and below that 200-day support. So that would be a good level for a swing trade. You know, but we could also just face the bearish side of things, where we break down, back test here, ultimately break down, and you know, we end up at those lower levels as I mentioned before. So we do need to pay attention to that. This is really low time frame stuff. So we're looking at a little bit of, you know, somewhat bullish, more bullish momentum on the 1 hour, a little bit more bearish leaning on the 4 hour, and then also kind of more bearish on the higher time frames. So if we do get a breakout here, you know, I don't know how sustainable it's going to be. We're going to have to consolidate a little bit, but we really want to gain or get above these key resistance levels right through here if we want to see more continuation. So looking at kind of, we'll go back to the weekly here, and I just want to show you again, we're taking a look at our moving averages here in specific. So we see that 50-day curling back over, you know, curling aggressively down, similar to over here, and over here we have price come below the 200-day. So we're still watching that, watching for that potential bear cross coming up here, and then seeing what happens after that. If price comes down, rejects, so we see right through here, we had that dump below the 200-day moving average right through here. And then as soon as we had that bear cross, the low was already in, you can see that. And then we consolidated, we pushed back up into the 200-day, but got rejected by the 200-day moving average right there. And then that just signaled the continuation of the downtrend. So we're kind of almost at one of those inflection points right now. We've got that 50-day moving average really curling down pretty aggressively, and we're just sitting right above that 200-day moving average, but not enough to convincingly hold it as support, in my opinion, right now. We could easily just break back below, get rejected, and then that's not going to be a good sign on the macro or kind of the high time frame side of things. If we break down and we lose these levels and we're stuck under these two moving averages, those are two very important moving averages for determining a macro trend, and we need to pay attention to them. So Bitcoin right now, again, is just in no man's land, in my opinion. If we go to slightly lower levels, there's some opportunities for swing trades, or if we break out and retest, there's also opportunities to enter some trades there. But right now, not really getting, not buying anything, not too interested, looking to kind of start acquiring Bitcoin below that $75,000 mark and then going from there. So we'll take a look at Bitcoin dominance as well, taking a look at the high time frame to start, and we'll just kind of look at a prior cycle comparison, see what's going on here. So we kind of saw in the prior cycle Bitcoin dominance topping right around that 618 Fibonacci resistance from the prior cycle high to the low. So if we pull that same Fibonacci from this high to this low here, we've already gotten above that 618 we see right here. We did come into this sell order block, rejected a little bit, but we are continuing the trend. We see that bullish setup of the moving averages. So right here, that 50-day bouncing off the 200-day, holding it as support. That's indicative of that uptrend. We see right here, that's exactly what happened. We see right here, that's exactly what happened. So we need to follow that. Right now, it's looking pretty strong, holding above decent support on the VRVP, and we are looking at a potential of coming up. We could hit that 786. That's a common retracement level as well. So potentially 66% dominance isn't out of the cards, in my opinion. It'll depend what happens kind of going forward. We really need to see some liquidity, some new interest show up in altcoins. But dominance for now looks like it's in a pretty good uptrend. We'll take a look at the weekly, kind of losing a little bit of momentum, but also you do see, if we zoom in, that's a bullish bounce here of that DMI positive line on the weekly. We see the MACD continuing to trend up, and we see the RSI also curling up. So Bitcoin dominance actually looks really good on the weekly. It could continue running. We'll flip to the daily, see kind of the difference in the indicators here. So you see in this one, the difference is we have that positive DMI line heading down towards the negative DMI line here. So a little bit of more bearish momentum on the lower time frame. Same thing with the RSI and MACD. So that kind of tells me, we might be running out of steam. We could get another leg up in Bitcoin dominance. If a left translated cycle plays out and things break down, then Bitcoin dominance is going to spike up regardless. But also, even if that isn't the case, I do still think we can push up. We have these order blocks right through here. Tag those highs before finding that cycle top and coming down. So still doesn't make sense to be heavy in alts yet, just based on Bitcoin dominance. Looking at Ethereum USD here, we can see kind of still in that downtrend structure, bearish cross of the 50-day and 200-day. So not looking too good. RSI look, nice and bottomed, but price can stay low even though the indicators have bottomed. That's why I like to pay attention to the DMI as well, because it gives a good indication of which way the trend and the momentum is going, while MACD and RSI kind of gauge if it's more overbought or oversold. So kind of oversold on the RSI MACD, and neutral-ish momentum on the DMI. So we want to see that bottom structure, higher lows, higher highs, and then we can really start to kind of look at Ethereum as a potential position. But for now, this bearish cross, we really need to watch that. If price comes back up here and rejects off that 50-day, that's a really bearish sign. So we either, if we come up there, we do have the potential where maybe we can kind of try to put in those higher highs, higher lows, in which case you're looking for that entry kind of on the confirmed multi-touch of this trend. So waiting for that. Otherwise, we can just break down and we end up at those lower targets in a sustained downtrend where we reject from the 50-day, we lose our low, and we're not able to hold that, and we just continue that downtrend to lower targets. So Ethereum, not really actionable in my opinion at this time. So we'll flip over to ETH Bitcoin, also coming into this heavy support zone, but also still stuck in that macro downtrend, stuck under the VRVP point of control. Continued lower highs, lower lows, not that interesting in my opinion. Gaining a little bit of bullish momentum. We see that DMI minus line starting to curl over, and we see the MACD and RSI also finding some kind of what seems to be, could be a low kind of here in those more oversold territories. So we're watching that. But for now, Ethereum, Bitcoin also still not, actionable in my opinion. We're still waiting for that confirmation. We have all this kind of it's a potential bearish setup in terms of the moving averages if we get rejected and we continue downtrend price action. So that's why I'm waiting for that confirmation. Multiple higher highs and lows, at least on the daily chart, supported by our momentum indicators. You know, good bullish cross here on the RSI, same with the MACD, and gaining a little bit of bullish momentum on the DMI. So we want to see this continue. I'm not sure we're going to be able to take out this high, but if we could, that would be great. Take out the high, put in the higher low, put in the subsequent higher high and low, and then that's our confirmation. We can enter the trend and ride it up until the trend just tells, or to the chart tells us that the trend is likely slowing down, losing momentum, and we can look to start taking profits. So we'll flip over to others dominance now, looking here, kind of also in this bit of this triangle. I'll take a look at the weekly here just to show you. We do like that. Yeah, so we see coming down this support holding through here. This is a bear flag structure though, and we had that bearish cross. So coming down, you know, bearish cross, we tried to break out again. We weren't able to hold it as support. Bearish cross again, currently stuck under the 50-day and 200-day. So it's that same price action that I'm warning about. We need to be aware of it. You know, DMI also looking a little bearish on the weekly chart here. We look at the daily. It's probably going to look a little bit better. So kind of a little bit of bullish momentum on the daily. That's kind of what I'm looking at right now, is essentially a lot of things looking a little more oversold, or sorry, a little more overbought, overheated on the high time frame like the weekly chart, and kind of looking like they might have a little bit of bullish momentum on the lower time frame. Lower time frame moves are not going to be as sustainable as the higher time frame moves. It could just be a bounce to lower highs, and then we ultimately continue breaking down, going into a bit of a bear market. If this is a left translated cycle, so meaning that if the cycle top is in and we're going to continue trending down, then I do expect at least a bounce to lower highs. You know, you might even be looking at a potential Fibonacci retracement here. You know, if the price, so if everybody kind of capitulates down here, it's not unlike the market to really reverse, go back up to that lower macro high, and then kind of really punish those people for selling. It makes them FOMO back in, and then they ultimately just get wrecked again when the market dumps out a second time. So right through here, basically, we came down, you see, broke below the 50-day and the 200-day. We got back above the 50-day, but rejected by the 200-day, and then that was that confirmation that the bear market was likely in, and we're going to continue that downtrend. So that's what we're watching for here. We see if the 50-day continues curling down like this, and we see the 200-day curling up like this, it actually is going to coincide pretty close with that 618 Fibonacci and sell order block. So we could see price bounce up to almost the 100,000 mark here, so 102 down to about 97,000, and that could be a lower macro high before we go into our sustained bear market downtrend. So really watching that. If we break below this support and confirm underneath it, I think the cycle is pretty much over at that point, and we need to really focus our buys on that lower level, that 35 to 40,000 kind of 786, 618 from the cycle low to high. So yeah, that's kind of my game plan right now. Either we're going to get some strength on the low time frame, look for that swing trade, or we're going to come back, we're going to come down to our kind of higher time frame, 618 to 786, look at building that spot position in here, protected with a stop loss, and then if we do break below, we're going to have an invalidation point right through here, where we're going to cut that trade, wait for our lower Fibonacci targets to fill, and then that's when we're going to re-enter the market in kind of a bear market accumulation scenario. So it's a lot to kind of cover, but I just wanted to update you guys on the major indices that we do follow. So I'm not going to get into individual altcoins right now, just because Ethereum, Bitcoin, TOTAL3, and others dominance are not bottomed yet. We don't have the confirmation, but it is showing different signs of strength kind of on the low time frame. Maybe we just do get that relief rally, and then we have to see where we go from there. So still just watching the charts, wait for that uptrend structure. It'll come to you, and then we execute it when the time makes sense. So if you like the content, please like, share, subscribe. It all means the world to me, and I'll see you guys in the next one.